This episode of the Construction Record is brought to you by the Ontario Sewer and Water Main Construction Association. Clean water is everybody's business.
Hello, everyone. Welcome to the Construction Record Podcast. It's time for part 2 of our Surety and Bonding series with...
It's Jamie Collum. I'm the Vice President of Construction Practice at FCA Insurance.
And Andrew Cartwright, the Vice President of Surety at FCA Insurance Brokers.
Okay, great. And I'm just going to say flat out, I know next to nothing about surety and bonding, certainly compared to you two guys. So it's going to be you two giving your expertise. But I'd like to start with sort of the current state of the marketplace with insurance and bonding. Obviously, things are, after a year, a lot different than they used to be. But what is the current state other than the obvious COVID-19 factors, or of those two?
Yeah, definitely. Thanks, Warren. I appreciate that. And we'll probably touch on bonding a little bit later, but insurance is the hot button topic, right? It's a lot of contractors are probably experiencing some frustration with the market right now. And it really goes to that concept of a hard and a soft market. And right now, what we're situated in is a very hard market. It's been going on for the past sort of 18 to 24 months. And in all likelihood, we suspect that it's probably going to go until Q4 this year and maybe into next year. And I think it's important for people to understand the concept behind a soft and a hard market. The hard market that we're in now is really fueled by increasing insurance premiums for contractors. They're going up and up every year. Sometimes it can seem without rhyme or reason, but what it comes back to is the insurance market, like any market, is affected by sort of overarching factors, right? Insurance companies make money when they don't have losses and when the investment income is quite good, and when things are going well, they're very competitive and prices go down. What's happened now with everything going on in the world is that it's hard to make a good investment return because insurance companies have to hold pretty conservative investments. Losses are going up because of everything that's gone on, whether it's the pandemic and business interruption or catastrophe losses. And so people are seeing pressure on all sides. Insurance companies are, and to offset that and make a return for their shareholders, they're raising insurance costs. And that's what a lot of contractors and really many different businesses are seeing in terms of increased insurance costs. Jamie, anything to add there?
Yeah. And so I think what I would add to that is, again, you nailed it. It's not just construction. It is across the all industries. Everybody's dealing with these increases in insurance premiums. Construction companies are facing anywhere from probably 10 to 20% increases on the norm. There's some industries that are 30 to 40%, and there's some that really are getting canceled and you can't really get insurance right now. And so it is a really difficult time. From a construction standpoint, there's classes that are worse than others. If you're in the snow removal business and you're listening to this, you know exactly what we're talking about. Their premiums are out of control and it's outrageous what they're being asked to pay, and it's putting some companies out of the industry, out of the business, really. Roofing contractors are dealing with it as well. I think from dealing with our clients, the toughest thing for them to understand is, you're a great long-standing company. You've been in the industry 15, 20 years. You don't have claims, and year after year, you're getting asked to pay more money, right? And it makes us look bad as the brokers who are representing these guys and then trying to get them the best deal out there and the best coverages. But our message is consistent, and it's like it's across the board, right? If you're getting a 5, 6, 7% increase, that's actually good news, even though it's hard to really stomach that. So.
Mm-hmm. And you said there are rising insurance costs. What specifically are those rising costs, and what specifically is causing these costs?
Yeah, so what you're seeing on all policies, whether it's auto, liability, pollution, builder's risk, everything a standard contractor has to purchase, depending on the class you're in, all of those premiums are going up. They're going up anywhere from 5 to 15, sometimes 20%, just top line, right? And what's causing it is what Andy had mentioned. It's not necessarily construction-related losses. It's a broader industry issue. You're seeing lots of increases in natural disasters, hurricanes, big hailstorm in Calgary earlier this year that caused $2 billion in losses. All those things factor down and affect the construction industry as well, unfortunately.
Okay, Andy, you anything to add to that?
No, I think it's spot on, and the best way to sort of visualize this as someone that doesn't do insurance every day is sort of thinking, sort of what are the levers that insurance companies have, right? And at the end of the day, they either make a profit on underwriting, which is they charge a premium and the losses are less than that, or they use the premiums that they're paid to invest and make some money on usually portfolios of bonds and conservative investments. And so, as we all know, it's pretty hard to make a good return on conservative bonds and T-bills and that sort of stuff. And like Jamie said, the market's been challenging. They've seen the catastrophe losses, they've seen the pandemic losses, they've seen other losses. And so they're getting the pressure on both ends, which means they need to raise prices to make money, unfortunately.
Yeah, and Warren, I'll give you a little example of how it goes, right? So as brokers on the front lines, right, we call up our underwriters and we say, hey, look, we got a renewal coming up. Last year, the client paid, $10,000, right, for his auto policy. And we know your boss told you got to get 15% increase from all of your clients this year, right? And so that's sort of the starting point, is that 15, and maybe 20, and maybe 10, but there's a starting point of what they've been told by their bosses that they need to get, right? And then we try to whittle that number down, and we sort of horseplay a little bit, like, oh, we'll give you 8 on this one, and you can get 20 from the guy across the street to make up for it. That's not our client, right? And those sorts of conversations, and you really have to leverage relationships. The other thing that makes a big difference right now is for contractors, we reach out to our clients nowadays 3-4 months before their renewal date, which means the day that their insurance policy expires, right? And they have to have the next policy in place. And we start that process early, and we say, hey, we need to have a conversation now about your upcoming renewal. Here's the questions. And they're going to say, wow, that is way more questions than you asked me last year. And the reason is because we have to dig that much deeper in for the renewals to ensure that there's no gaps, no questions whatsoever from an underwriting standpoint, right? And contractors are busy. They're all out there doing their jobs, right? They're busy on site, they're working away. And so we call them, we email them, and a month or two goes by, and they don't get to it until a month or two before the renewal, right? And it's late, and it's hard for us to do our jobs at that point. And so when your brokers are bugging you, and this is to all the contractors out there, listen, when your brokers are calling you and telling you, hey, we got to get on your renewal, they have your best interest at heart. We have to start the process early as possible right now to ensure we can get the best pricing out there.
Okay. And besides rising costs, there's also rising insurance requirements for contractors. So maybe we could go into some of what those are.
Yeah. So great point. And it really is the perfect storm right now for contractors, because you're dealing with just these standard increases across the board. And now we're seeing an increase in insurance requirements. So specifically what we're seeing more, and they just issued an updated CCDC2, which is the most commonly used construction contract in Canada. As part of that, they also updated what's called the CCDC 41, which is a separate publication, but it outlines the standard insurance requirements for the CCDC2 contract and also the CCDC 5B. And what they've done is they've increased the standard limits on your general liability and your automobile liability policies from 5 million to 10 million. So right away, you're dealing with a general hard market increase, plus you're having to pay higher coverages or purchase higher limits as well. So premiums are going up on that as well. In addition, they've added in some new coverages. So there's a new standalone contractors pollution liability policy, $5 million limit. That is now a requirement under the CCDC2 contract and the CCDC 5B. That we've seen we've seen it more and more commonly over the last probably 3-4 years. Different municipalities have written it into specs. More commonly at the 2 million limit than the 5, but that's a new requirement that all prime contractors signing these contracts have to purchase if they don't already have that in place. And then we've also seen drone coverages written into that contract as well. Drone is an interesting one because it is, I guess the way it's written is basically if it's going to be used on the job site in plainest language, right? So if you're a contractor and you don't have a drone and you are certain that there won't be any drones on the job site, then you don't need to carry this coverage. However, it's a gray area, and it's something that everybody needs to be considering, because let's say you're the prime contractor and you guys are building a 10-story condo, right? And you've got 12 different subtrades coming and going from the job site. So you've talked to your team, everybody knows no drones on site, right? And there was a site meeting day one and all the subtrades were told, hey, no drones on site, everybody's in agreement. Well, on day 100, a junior guy from the roofing contractor, it's a Friday afternoon, he has no clue about these rules. He brings his personal drone to the job site and launches it off the roof, right? And there's an incident, and there can be all sorts of incidents. I think of situations where he's flying it around and the crane operator gets distracted and something happens and his load falls or it swings into the building and there's damage, right? Or we've also seen claim situations where the operator of the drone is not that experienced and can crash into incoming traffic, some scenario like that, right? And if you're the contractor, if you're the prime contractor on that contract, you're gonna say, well, hey, it wasn't my drone, right? It was his drone. Well, it doesn't matter. You're gonna get pulled into the lawsuit. You're gonna get pulled into the issue. And if you don't have coverage, your general liability policy is probably nowadays going to exclude that, and you're going to be left holding the bag there. So it's something that you either need to be purchasing or at least need to be really clear on all job sites. If you're not carrying that coverage, that drones should not be permitted.
Mm-hmm. And speaking of drones and sort of newer topics, these are things that hadn't come up in, I guess this is the last few years this has become a factor. This and cyber, which would mean people possibly breaking in or your documents being secure or, being compromised. What are some of the newer topics that people need to be aware of that maybe a guy who's been doing this for 30 years doesn't think about until he has to?
Yeah. And it's a really good question, actually, because these are new things, right? Like I can remember drones, it's probably 4 or 5 years ago when you started seeing these things whipping around, and it's like, what the heck are those, right?
We started writing about them as look at this kind of a thing back then. But now it's, I don't know if it's standard yet, but it's getting there.
Sure. I mean, we were all fascinated by them, and now you're kind of like, oh, that's kind of annoying. There's that buzzing sound again, right? Yeah. And actually talking about that, there's another issue with drones, and it's the invasion of privacy. We've seen lawsuits flying around about that, right? Where especially in the downtown cores, when drones are going around and they say, hey, that guy was, peeking in on me or whatnot, right? So there's a whole other consideration there. So drones are definitely a hot topic, and cyber is another one. And so cyber, I like to start by saying that, first of all, like what the heck is cyber, right? Because if you're in insurance, you know the term cyber, but most people don't know what cyber insurance or cyber coverage is. And so the easiest way to think of it, and going back to that example of a guy who's been in the industry for 30 years, right? So 30 years ago, think of it a scenario where you go home on a Friday afternoon, you lock up your office, right? Somebody breaks in and they come in and they steal all your filing cabinets and they take all your information out of your office and they put a big lock on the door, right? You come to work Monday morning and you can't get in, right? So you have no idea who's supposed to be doing what, where you're at on the various jobs, what estimates due today, and so on and so forth, right? Well, that's what's happening, but it's happening from a technological approach, right? So hackers or criminals, essentially, cyber criminals, are breaking into your computer network, right? They're finding a way in, and that technological side, that's a way above my pay grade, right? But they're finding a way into your system, and they're getting a hold of it, and their goal is to just shut it down, right? And you're all working away, and all of a sudden, boom, everything goes black, and this note pops up and say, hey, we've got your system. Your estimators can't bid on jobs. You can't close jobs. Your PMs can't update jobs, right? You can't send out payments. You can't pay your team. You can't do anything. And they say, hey, we want Bitcoin, and we want $50,000 or $500,000 or $5 million, right? Depending on size of your operations before we're going to release this. And so if you have a cyber insurance policy, it's there for that reason, right? It'll either pay the ransom or they're going to get you back up and running, depending on what you have. Often there are response teams that will get into your office and deal with all these things. So that's the one angle they're taking. The other thing that we're seeing very commonly in the industry right now are called phishing attacks. And this is a scenario where somebody is they're sending emails into your office, right? And they're trying to get somebody to respond to it. And there's lots of different approaches. So we had somebody send one in our office internally one day, and it looked like it had come from one of our staff members. And it was a big announcement to the team that we were getting into pet insurance, right? Click this link. We're going to start selling pet insurance. Now, as a construction brokerage, most of
seems
us
unlikely.
Yeah, unlikely, right? But most of us weren't fooled. But a couple of people were like, "This is interesting," and you click on the link, right?
Mm-hmm.
And there's some sort of virus that they're trying to plant into your system that gives them a backdoor in. The other thing that we're seeing, and we've seen this happen to contractors, and we've seen this actually, there's been some pretty big blowouts with municipalities falling for this as well. Where let's say you get an email and it says so you have a subtrade, and his email address is subtradex@gmail.com, right? And so you're corresponding with John Smith from Subtrade X, and that's a regular correspondence. You get an email from John one day, and you don't realize it's actually subtradexx@gmail.com, right?
Mm-hmm.
The logo is the same, the signature is the same, everything's the same. And John sends you a note and say, "Hey, just an update. We've switched from RBC to TD Bank. Here's my new bank account information. When you send this week's draw, please send it to the new bank," right? So your payables team receives that information. "Oh, okay, John, no problem. We've logged this into our system. Okay, thanks. We'll see you on the golf course next week, John. Great." And, payment goes out. Monday or Tuesday, John calls in and says, "Hey, guys, I never got the payment last week." "Oh, no, we paid you. Check your bank." "No, I didn't get it." Yeah, we did. We sent it to your new information. You sent us this on Thursday. I never sent you that email," right? And then you quickly realize you've been duped. And there's been sizable payouts. I think it was the city of Ottawa actually that got fooled on a really big one a couple of years ago. So that's another coverage that contractors should be carrying right now. There's obviously lots of ways to protect that, depending on who's sending out money, due diligence, but nobody's perfect, right? So these coverages are important. The thing I will also add on the cyber topic, in the last month, we've had two major insurance companies hit in North America. And they've taken them down to the point where they lose their emails, they lose access or the ability to issue policies, to handle renewals, to do billing, right? So they're not just going after, Steve's general contractor company down the road. They're going after major companies as well. So everybody is vulnerable from these attacks. And these are the same insurance companies that sell cyber coverage, right? So they should know how to prevent these things. And so it is a really serious issue right now, and something that everybody should be considering.
Okay, and just in general, what's the state of affairs with bonding and surety, like in terms of claims activity? Is there more because of COVID, or are there less people working, so there's less insurance claims? How's that working?
Yeah, so luckily the bonding picture, it's I guess not all bad for contractors. We've talked about sort of more coverage and increasing premiums and sort of those challenges. But the bonding space, like we talked about the hard and the soft market before, the bonding space is really sort of in a soft market and has been for some time. In Canada, the bonding companies have been pretty profitable over the last 10 or 15 years. To give you some context, with COVID last year, the bonding market did shrink a little bit by about 5 or 6%. The loss ratio, so on every dollar premium they generate, they typically pay somewhere between 20 and 30 cents in claims. Last year was up to 40, which is obviously not as good as sort of the past 10 or 15 years, but still, all things considered, quite a good year. And so I think when COVID started, there was a lot of uncertainty in the construction market. Contractors were certainly worried about what was going to happen. And I think that was reflected in sureties as well in those first months when we were in hard lockdown. They weren't sure sort of what way this would go and how contractors would fare in the fullness of time. But as we sort of emerged from that first month or so, construction for the most part was considered essential. People got back to work. They made the adjustments required to sort of get things done, whether that's health and safety or whatever else to make it work. And for most parts, contractors have fared pretty well. The government money that came in, obviously, whether it's the wage subsidy or some of their loan programs, has also helped sort of prop contractors up. So when sureties are looking at contractors' results, they've been, by and large, pretty good in the past year. And so that soft market has continued and continues to present good opportunities for contractors that are looking to go out and either establish their first bond, or existing contractors that are taken that jump to the next level and looking at larger work or looking to sort of reevaluate the terms and conditions of their facilities. So it's by and large been a pretty good environment for them. But that can always change. Like the hard market in insurance, it wasn't like there was necessarily a ton of warning signs for it. There were some, but it can come quickly as those losses come. And in surety, in the past couple of years, contractors, and you've probably heard, Warren, but there have been some fairly sizable surety losses. But the thing that's led it to not turn into a hard market is the fact that those losses haven't been widespread, right? It's really been sort of one or two or three very large contractor insolvencies, and it's not been a systemic issue where hundreds or thousands of contractors across Canada are running into serious financial difficulties. It's been isolated to a few situations. So when you look at the sureties out there, and there's 10 or 15 of them, in any given year, maybe 2 or 3 are seeing sort of tough years of losses, but the balance of the industry is doing very well, right? And so that keeps pressure. Those companies want to add business, they want to put on new contractors, they want to increase revenues, and that makes it a pretty favorable environment for contractors.
Okay, and I guess my final question would be, we see vaccinations going up. It's taking forever, but we're eventually going to be in a post-COVID world. So what are some of the emerging trends you guys see with bonding past all this?
There's so much stuff that's going on in a contractor's world right now. Like I give them a lot of credit. They've had to adapt to just so much in the past year, right? With COVID and otherwise, right? Like we've talked about insurance requirements, hard insurance market, health and safety. The Canadian marketplace too is a really interesting market for international contractors. Our governments in Canada are spending billions of dollars on transit infrastructure. The ICI space is doing quite well. And so when foreign contractors look at Canada, they see it as a great market with lots of opportunity over the next 10 or 20 years. And so that in itself presents challenges for regional Canadian contractors because they have to continue to step up their game, and whether that's investments in technology to make themselves more efficient, whether it's drones or automation, whether it's project management software, those investments are things that they're going to need to make to keep their businesses sort of at the cutting edge and remain competitive, right? The health and safety atmosphere, I don't think that's going to change drastically in the short term, right? I think we're going to be, unfortunately, wearing masks for a little while, and it's going to take a while for people to get their 2 doses and sort of figure out how we determine who has and who hasn't been vaccinated in that whole environment. So there's going to continue to be sort of shifting sands in terms of health and safety over the next, I would imagine, a year to 18 months. So it's a lot of change out there for contractors, a lot to digest. And when we're having conversations with our clients, it's really try and rely on those advisors that you have, whether it's your construction lawyer, whether it's your accountant, whether it's your surety broker, whether it's your insurance broker, whatever it might be. Utilize those experts, right? As a contractor, you're focused on running your business, you're focused on executing work, you're focused on your staff and your P&L. Rely on those additional advisors to help get you through this stuff and navigate some of these challenges and changes.
Okay, great. And Jamie, any final words from you?
Yeah, the one thing I think that I would add that is really good news, and it's primarily in Ontario, but it is being rolled out across Canada and across various jurisdictions, is the new prompt payment legislation. So we have seen it really pick up probably slower than we expected in Ontario, and COVID is the common excuse there. But the idea behind this legislation, as it does pick up steam, is that contractors are now supposed to be paid within 28 days. Right, and that is a legally binding legislation, right? And historically, we're used to guys getting paid in 60, 75, sometimes 90 days, whether you're working for private or municipal owners. And so that has really improved the cash turnover of contractors, right? And how quickly they're getting cash in hand. And it doesn't just affect the prime contractors, it affects sub-trades as well, because it's 25 days to the prime contractor, 7 more days for the prime to pay their sub-trades. So money should be and will be slowly, as this picks up, flowing much quicker through the pyramid, right? And I think what is really positive about that from a bonding standpoint is that one of the key things bonding companies look at from a leveraging standpoint is called working capital. And that means your availability of cash really and receivables coming in, less any money that you owe out to your trades and your staff and so on, right? And how much money is there for you to work off of, right? And because we're used to this money coming in much slower and now it's coming in much quicker, we feel strongly that you can work this money harder and faster, right? Which in turn leads to more bonding, bigger jobs, more jobs, right? And so there's a lot of pressure on the industry to sort of catch up with what's going on here, and that the old sort of trends need to get tossed out the window, and we need to catch up with the new pace of money moving through the industry. Going back to the insurance side, the one thing I forgot to mention there is that the new insurance limits that I was talking about, even though right now these are only set at the prime contractor level, we went through a change, very similar change in 2008, the last time the CCDC 41 document was updated. And we saw it quickly. It took a couple of years, but we saw those old limits, which used to be a $2 million general liability, for example, and it went up to 5. Now it's going up to 10. We saw that not only at the prime contractor level, the general contractor level, we saw it flow down really quickly to the sub-trades as well. And we expect to see that again. And so we expect that it's not just going to be the general contractors who are going to be asked to carry the $10 million liability limits moving forward and auto limits. It's also going to be the sub-trades as well. And so these costs are going to affect everybody across all spectrums of the pyramid, unfortunately.
Okay, great. Thanks for joining me, and Jamie and Andy. And I look forward to our listeners hearing more of your insights on the next episode of the Construction Record.
Great. Thanks, Warren.
Thanks, Warren.
No
Appreciate it.
And if you'd like to listen to part 1 of our Surety and Bonding series, go to the Journal of Commerce or Daily Commercial News podcast section. They'll be there. And listen to our Wednesday podcast and our Friday podcasts on Apple Music, Amazon Music, or Spotify, or on the Journal of Commerce and Daily Commercial News. Thanks, everyone.
This episode of the Construction Record is brought to you by the Greater Toronto Sewer and Water Main Contractors Association. Clean water, our goal, our future.